Welcome back. Over the next 6 lessons, we're going through Noroview's entire indicator library: basic, advanced, and smart. We start with the basics. In this first part, I'll show you how to add and manage any indicator, the same workflow every time. Then we'll cover the 5 that draw right on your price chart: moving averages, Bollinger Bands, VWAP, pivot points, and trading sessions. First, the workflow. Learn this once and it applies to every indicator. Click indicators up top and the picker opens, split into 3 tabs: basic, advanced, and smart. Each row has a short code, the name, an info icon for a quick description, then a star to favorite it, and an add button. There's a search box too if you'd rather jump straight to the one you want. Add one and it appears on your chart with a little legend row up here. Hover it and you get an eye to hide it, a gear for settings, a duplicate, and a trash to remove it. Open the settings and every indicator uses the same 4 tabs. Inputs for the calculation, style for colors and line widths, visibility to show or hide parts and choose which timeframes it appears on, and templates to save your setup. That's also where reset to default lives if you ever get lost. Learn that pattern and you've got the whole library. Now let's go through the price chart indicators. The moving average smooths price into a trend line. In its inputs, the type dropdown gives you all the classic flavors: simple, exponential, weighted, Hull, volume weighted, and Wilders. Each reacts a little differently. Exponential is the popular one for faster response, so let's pick that. Length sets how many bars it averages. Watch what happens as I raise it. The line gets smoother and slower. A 50 is a medium trend. A 200 is the big picture trend. Source lets you average the close or the high, the low, or a blended price. An offset shifts the line forward or back in time. Over in style, you can recolor it, change the line width, or make it dashed. Here's a tip. Because you can duplicate an indicator, you can stack 2 or 3 of different lengths. That builds a ribbon. Let me duplicate this one, drop its length right down, and give it a new color. Now you've got a fast line and a slow line, and you read trend strength from how they fan out. Bollinger Bands wrap a moving average basis in an upper and a lower band. They sit at a multiple of standard deviation, in plain terms, a volatility envelope. The length sets the basis period, usually 20. Stat.dev is how wide the bands sit. 2 is standard, widen it, and only the bigger moves ever reach the edges. You can even choose which moving average type the basis uses. When the bands squeeze tight, volatility is low, and a big move is often brewing. When price rides the outer band, momentum is strong. And in style, the basis, the 2 bands, and the fills between them are all separate, so you can make the envelope as subtle or as obvious as you like. VWAP, the volume-weighted average price, is one of the most important levels in intraday trading. It's the average price, weighted by volume, essentially where fair value for the session sits. And it's a magnet institutions trade around. The anchor decides where it resets, each session, each week, or each month. Set it to rolling window, and it reveals a length so you can run it over a set number of recent bars. I'll put it back on session. That's the one most intraday traders want. The band multiplier adds deviation bands to mark stretched levels above and below. Price above VWAP is broadly bullish for the session. Below it is bearish. And tests of VWAP are classic mean reversion spots. If you trade intraday, keep this one on. Pivot points plot support and resistance, calculated from the previous period's high, low, and close. In the inputs, you choose the formula: traditional, Fibonacci, Woody, Camarilla, or DeMark. They each space the levels differently. Camarilla is a favorite for tight intraday ranges. Anchor sets the period. Daily pivots for day trading, weekly or monthly for the bigger picture. You can show 1, 2, or 3 levels of support and resistance, and turn the labels on so every line is clearly marked right on the chart. These are objective math-based levels that a lot of traders watch, which is exactly why they tend to react. Great for planning entries, targets, and stops. Last in this group, trading sessions. This shades the Asian, London, and New York sessions as translucent zones right on your chart, so you can instantly see which part of the day each candle belongs to. The inputs let you set the exact hours for each session in UTC and toggle the labels. And in style, you can color each session and set how strong the shading is. Why does this matter for order flow? Because behavior changes dramatically by session. The London Open and the New York Open bring the volume and the moves, while the Asian session is often quieter and range-bound. Seeing those boundaries helps you time when to expect real order flow and when to sit on your hands. So that's the first 5 basic indicators, the ones that live on your price chart, plus the universal workflow for adding, styling, and managing any indicator in Noroview. Let me clear these off and leave a clean chart. In the next lesson, we finish the basics with the oscillators and the volume tools: RSI, MACD, stochastic ATR, and volume. Subscribe, hit the bell, and I'll see you there.